Now it's time for On Point, where we speak to experts to delve deeper into the biggest news stories in the spotlight right now. As was roundly expected last Thursday, the Bank of Korea raised the benchmark interest rate by 0.25% to 1%. Watchers say they expect more rate hikes continuing deep into next year in a bid to try and stop housing and consumer prices rising so quickly.
South Korea's central bank says it was left with no other option but to make the call, with inflation hitting a high not seen in a decade in October, stressing any indecision by them could see inflation spiraling out of control. But what about the effects of the economy and households, as well as the prospects going forward? For more, we connect to Professor Oh Joon-seok from Sookmyung Women's University School of Business. Good morning, Professor.
Morning.
Now, did anything the Bank of Korea say last week surprise you, or did you expect some of its remarks about the reasons for the rate hike and the economic outlook?
It is no wonder last week Bank of Korea raised the reference rate for the second time this year amid worries about inflation. I suppose Bank of Korea could not have said longer on its ultra-loose policy when the inflation rate hovered over the long-term target of 2%, as the consumer price index rose by an average of 2.2%. It has been expected from the sense of economics. Now is the time to send signal to the market lenders. Time of contraction comes. Timing is also rationally expected in response to the recent Fed rate increase in the United States. Another raising? Yes, it will be expected next year, counting on the political atmosphere after the presidential election. It could highly be expected around August or September again. Bank of Korea might lead the loan market and converge its target interest rate back to the previous normal. What I mean that 1.25%, the average rate before the COVID-19 pandemic. What surprised us recently is the attack of Omicron, the variant. The reaction around the world has been swifter and stronger. If it continues, Korea might face stagflation.
Right, and the ever-increasing wealth gap has always been an issue here in South Korea. This has caused societal tensions for decades. Do you foresee the gap between the rich and the poor widening even further in the months and years to come? And what do you think the political repercussions of this could have?
It could get worse. According to Statistics Korea data, of two groups of Koreans between age 20 to 30, the upper 20% of young Koreans accumulated 35 times more wealth than the lower 20% last year. The total value of property and asset owned by the young and wealth surged by 8.8%, while the lower class only saw a 2.6% increase. Just as property stifles human potential, wealth polarization chokes society's potential. It can never be our future when, even with excellent business skills, one cannot start a business without capital. It could not be fair. Social conflicts and political insecurity from polarization can pose a serious problem, generate a social cost. Political repercussion. Words cannot be changed by imposition of almighty regulation. Let me borrow some words. The sound must be an echo to the sense. What we need most is scientists and economists. Reforming financial system as wealth gap stabilizer is needed at this moment, and it depends on change by market choice, how to concentrate funding on the weakest class and aid harder people without weakening their motivation to work and save for the future. Let the market go.
And Professor, during last week's announcement, the central bank also raised its inflation outlook to 2.3% for this year and 2% for 2022. Now, given that the price of everyday goods is going to rise so much over the next year or so, could you envision a scenario in which public firms are ordered to pay their workers more? And does the government have the clout to pressure private sector businesses to do the same?
Maybe majority ones, but the consumer price rose 3.2% in October from a year earlier, marking the fastest clip since 2012. The Bank of Korea raised the forecast for 2021 consumer price to 2.3%, up from a previous estimate of 2.1%. Amid global supply chain disruption and rising energy cost, prices for a wide range of products are shooting up. the fast-paced and continual rise in consumer price could deal a blow to the economy in a way that undercut the purchasing power of Korean household. In addition, the Bank of Korea data does not include the housing cost. Those surged during the pandemic as speculative real estate investment, despite the repeated introduction of government policies to battle property speculation, which has been hinted as nothing but wrong intervention. In this respect, I might say, though it could raise the necessity for government to intervene in the wage increase directly or indirectly, it should be added to another case of government failure.
Right, well, it's a big problem, and you might say that if they raise wages, that might make inflation even worse. But I speak to a number of Koreans, and they say their salaries haven't even gone up in 5-10 years. So it's a really big problem. And then finally, most of South Korea's macroeconomic forecasts still look pretty okay, all things considered. While it's likely to be tough for regular people, as you touched upon, what's your forecast for the country's growth next year? And will exports, in particular the major South Korean export items like semiconductors, continue to recover strongly in 2022?
According to Korea Capital Market Institute, a local think tank in Korea, Korean economy is likely to expand 3.2% in 2022 on the back of recovery in private consumption, brisk export. I could expect that largely the same scenario on condition that the variant Omicron cannot affect in the long term on the global economy. Private consumption is expected to show a market upturn in the first half of next year, thanks to a shift in anti-COVID measures and improving consumer sentiment. I agree. Korea's overseas shipments are projected to remaining strong in the coming year, bolstered by the global economic recovery. Korean Capital Market Institute painted a rosy growth outlook based on mainly on external economic factors for the United States and China. Those two countries are main trade partners of Korea and main export market of semiconductor and automobiles. Relatively, internal economic factors expected a gray outlook due to weakened market demand with inflationary pressure. But when the interest rate hike become effective next year, I could expect that Korea's consumer inflation rate is predictable and then predicted to drop to 1.5% in 2022 from this year's 2.3%. It could encourage the market demand next year.
All right. Professor Oh, we appreciate your insights as always. Thank you so much. We'll talk to you again in our few next newscasts.
Thank you for having me.